Hello traders, today is June the 23rd. My name is Double Hornsey. I'm a market analyst trading. And today I'm looking at the pound versus the US dollar. Okay, looking at the heat map, we can see that the pound currently is stronger than the euro, the Swiss franc, and the Australian dollar. The yen is currently the strongest currency across the board, closely followed by the US dollar, and the euro is currently the weakest. If we go to an economic calendar, we can see that just after the London Open today, we have French and then German flash manufacturing and services PMI all came in worse than expected. So that's kind of why the euro is weaker. The UK had flash manufacturing and services PMI. The overall composite came in better than expected as the flash services PMI beat expectations. We just had initial jobless claims from the US, which came in worse than expected. So we're seeing the US dollar slightly weaker just on the back of that. And then we've got flash manufacturing services PMIs coming in later ahead of the Fed Chair Powell's sort of conclusion to his two-day testimony. So really, if we're looking to go long, we need to wait until after all this news has been baked in, and then we sort of see where price action is. Just going to the active trader platform, looking to the left, we've got pound versus US dollar on this sentiment indicator. 56% of traders are trying to go long. That could quite easily move down to 50, so relatively equal. If it was to go through the 60, 70% bullishness, then we'd be looking to fade it. But at the moment, we have to look at price action and momentum. So on the monthly chart, we can see that the lowest of the lows that we can see at the moment came in around end of 1985, just above parity at 1.04 to 1.05. That was a big move down from 1980. So we had a big impulsive move to the downside. We did have a big sort of bearish move here. This is obviously the great financial crash. Before that, in 1992, another sort of big impulsive move to the downside. That's when George Soros was trying to break the Bank of England. We did make our way back up to around the sort of two big figure here. So between 1980 down to 1985, sort of corrective move back up towards 50% to 61.8% of that move sort of landed around the two. Looking to see if we can make our way down to parity at some point. So I'm just looking at the most recent, most obvious impulsive move. I've labeled that as a wave one. This is a wave two, sort of very complex corrective move up to wave two here, back up to the 200 period moving average on the monthly chart. Then potentially another impulsive move to the downside, labeled that wave three, because we've got then a symbol corrective ABC type 4 wave before potentially we sort of continue lower into the sort of final fifth wave to the downside. So, if this is not really an accumulation, if it's just a corrective period of time between Brexit and today. Obviously, we had this move down in February, March 2020. That was the pandemic. We did obviously break structure from 2016. So again, looking for more downside pressure based on that. If we'd basically got back above the April 2018 highs back in 2021 for this wave four, then maybe I'd be looking more positively towards the upside. But at the moment, looking for longer term movements to the downside. Obviously, the US dollar has been appreciating. It's today where we've had that little bit of bad news from the US and some good news from the UK, which has given the pound a bit of a lift. So going to the weekly chart, looking into that sort of corrective period between what I've labeled as wave 3 and 4. The move down the last couple of weeks came down towards where the wave 3 sort of terminated. And then, some traders were actually looking for an inverse head and shoulders. Now, like I said, we are sort of near the sort of all-time lows from this chart. So if you're looking for an inverse head and shoulders, at the lows is where you want to find it. Obviously, this pattern doesn't confirm until we break above the neckline, which would basically be a close around 1.44 to 1.45. If we were to get back above there, then you're looking for a measured move from the head to the neckline. So you're looking for at least another sort of measured move higher, which takes this price action up towards 1.73 to 1.75. So potentially looking to the left, that sort of undoes that whole impulsive move to the downside through the wave 3. And then, this whole count has to be redone. So maybe where I put the head would become the end of wave 5. And then this is now some other sort of corrective move to the upside. So Elliott Wave is good in hindsight, just trying to work out where we might be going. Currently, I'm looking for more downside pressure based on this impulsive, corrective, impulsive, corrective, impulsive type move. Wave 3 cannot be the shortest wave in terms of impulsive waves. So if we just get rid of this and we measure wave 3, so this is potentially wave 3. And I've just said it can't be the shortest wave. So wave 5 would have to be shorter than this range here. So if wave 5 started here, then wave 5 has to essentially come up around the parity sort of level. So we'd be looking for parity to be the termination of wave 5. If we were to look at a Fibonacci extension tool, so going to trend-based fib extension, go from the top of wave 1 to the bottom, then up to the wave 2 termination, you can see a measured move obviously takes us down to 0.94. And I've just said that we don't really want to sort of see this level here get tested. So somewhere between 1.1 and parity, I'd imagine wave 5 would terminate. All right, so if we are looking for the downside pressure, we need to see that sort of continue on the daily. So looking at the daily, just get rid of some of this. So if we're not going to look for an inverse head and shoulders, we are just basically looking for reasons to go short. Now, on the sort of daily chart, we've got an imbalance here. So up to 1.25, and we had this impulsive move to the downside. So this imbalance here, where it just sort of like makes lower lows, lower highs, we're looking to see if we can potentially make our way back up to the 1.248 to 1.25. If we were to get through there and then take out this 1.266 to 1.27 and close above that, that is a change in market structure. And then we can start to look for, potentially larger moves to the upside. If we look to the left, 1.3 is where this impulsive move sort of originates from. So up to the 21st of April's low would be a potential target. So we bring that down and we look to the left, that kind of would be confluent roughly with the 200 period moving average on the daily chart and this sort of balance area. Getting through that, there's another sort of imbalance here. So we're looking towards 1.35 as a potential, larger extension to the upside. So if we are looking for just, a corrective move between this high and this low, based on the fact that, potentially we see a close above here, then, looking to the left, we've got this target around 1.35 to 1.36, and then the last one around 1.4 before we start looking for a completely different sort of scenario. At the moment though, just keeping it real short term, I'm just looking to see if we can get up to 1.248 to 1.25 to test this sort of area here. So looking on an hourly chart, so we had this low to this high, just looking to see if we can basically get back into the middle of that range. We saw that last week, we broke lower than that sort of range. We got back inside, went back up to the 50% level at 1.24, and then potentially we're making an ABC sort of correction, or potentially if this is more of an impulsive move, this could become wave 1, where I've got wave B terminating, that could be wave 2, and then we'd look for, a wave 3, 4, and 5 in the future. So something like this. So wave 1 to 2, 3, 4, 5. So that's another potential wave count to the upside. At the moment, just looking to what's actually happened today. Obviously, we had a big sell-off with the European PMIs. Everybody was expecting the UK PMIs to come out worse than expected. It actually came in better. So we had a reversal around 10 o'clock today. We've just got back above the London Open. So we're looking to see now if we can essentially break higher, take out relatively equal highs up here, and then possibly close the day around the 1.23 to 1.235. If we obviously get a much weaker US dollar, then we're looking to see if we can take out the swing high tomorrow of the 1.24, and then that would be a real test of this sort of change in structure. You can see here that we had big impulsive move to the upside, 1 p.m. on 16th of June, took out the high here. We came back down, relatively quickly on the 17th of June, so on Friday, tested the imbalance here. That's held. So if I just put a line across there, this line here is currently holding as support. So 1.217 to 1.218 is acting as support. If we were to break through that and close below that, then that reverses all of this price action, all this support, all the buyers have basically disappeared, and then we can start to look for a move down to 1.19. Otherwise, we're looking, like I said, to take out relatively equal highs up here first. And if we do get through that sort of range, then that opens up the test of old support, which became resistance. See if we can get back above there. And then looking for a breakout, retest, continuation to the upside. So it'll be something like this once we get back above the 1.24. So at the moment, we are seeing green candles. So if we can get, like I said, towards this liquidity up here, then that would be good for the bulls. But, overall, going back to the sort of weekly chart, we've got a long way to go before we can sort of say that this big downtrend has reversed. I am expecting some sort of stall around the 1.245, 1.248, or maybe, fake a lot of bulls back in and then see if we can get reversal at the 1.3. Right, so at the moment, looking for short-term bullishness, but overall looking for a reversal, so somewhere to sell the rallies. Right, that's what I'm looking at on the pound vs US dollar. Speak to you again tomorrow.